I'm Imran and Sultan. I'm Program Director for Punjab Affordable Housing Program. But from onward, we can take a you and please start introducing yourself.
Assalamualaikum. This is Anas from Avari Program.
Assalamualaikum everyone, this is Shehnaz. I'm working as a Chief Credit Officer in Avari from last 14 years.
Assalamualaikum, my name is Arshad and I am working as a Relationship and Business Manager in Mizan Bank, Knowledge Bank.
Assalamualaikum, from Mizan Bank.
Assalamualaikum, Ji Ali Ahmed. I am associated with Bank Employee Summit.
Assalamualaikum, Ji Nadeem Gilani, Unit Head Product Management, Bank Employee Summit.
Assalamualaikum, Asif Niazi, Director Special Planning, Punjab Housing and Town Planning Agency.
Assalamualaikum, Deputy Director Town Planning, Punjab Housing and Town Planning Agency.
Assalamualaikum ji. Today, Head Retail Finance, Bank of Punjab.
Head of Finance, Bank of Punjab.
Assalamualaikum ji, Avari, I'm consultant to the Punjab Affordable Housing Program.
Good morning, everyone. Nohn, I'm an economist and development consultant with the World Bank.
Good morning everyone, my name is Zhang, Senior Urban Specialist of the World Bank team. Very nice to meet you all.
Good morning everyone, my name is Shin. I'm a Senior Urban Specialist from the World Bank. Nice to meet you all.
My name is Shehnaz, Specialist Urban Data Analytics, Punjab Affordable Housing Program.
Head of Sales, UBI Bank.
Head of Consumer Banking, MCB Bank.
Sultan, Business Head Secured Lending, MCB Bank. Assalamualaikum, Head of Consumer, HBA.
Good morning, I am Fawad, Head of Business Planning Consumer Banking from Asri Bank.
Alam Zaid, I look after mortgages for B Bank.
Good morning, this is Fakhar Abbas, Regional Head House Building Finance Company.
Asri Bank.
Assalamualaikum, Naveed Ahmed from Pakistan Housing Finance Company.
Assalamualaikum ji, Asif Iqbal, Senior Specialist Financial Management, Punjab Affordable Housing Program.
The World Bank team. I am Shehnaz Arshad. I am a Senior Urban Specialist and the team lead for this initiative that the World Bank is funding. The details of the program I think Imran would be introducing, so I will not repeat those. But basically, what we had anticipated from this roundtable was to get a very honest feedback from you on the initiative and the details of the program that we are trying to now, fully launch. We have done all the groundwork, but it's now ready to be launched, and delivery of affordable units hopefully will start soon. But as you know, affordability itself is difficult to achieve under the current macroeconomic situation. So really need your honest opinion as well as innovative ideas and solutions on how we can offer products to people we are trying to target to make housing affordable for them. And happy to discuss more on the options once you've gone through the earlier discussion. So thank you for that, and again, very warm welcome.
And we think that with the support of the World Bank, we are going to unleash this sector. And these are all of the challenges which are the bottlenecks, which you know better than us, starting from that we understand that part of the government, we always have a long and lengthy, costly development condition. That's the reason that the cost of the housing and doing the business is going higher and higher. Then you people will be equally confused like us that what is the role of that city development authority, what Punjab Housing and Town Planning Agency is doing, what are the roles of the local government in giving away these kind of NOCs. Then this is part of the flaw in the government side, that if we come up with a government side any housing scheme, then the last mile infrastructure that comes in the last. That's why we are not able to habitate them faster. Then it's really a challenge for the government to mobilize the land for affordable housing. Then if private sector, the private construction industry shakes hands with bankers and financial institutions like you, but government makes so much time to to take a decision on off-takes, another bottleneck. Then again, there's nothing to hide this thing that how outdated our rules and regulations are. Everything is written in 60s and 70s. And whichever the policy we try to make, that is, that the world has changed. And obviously, if you're sitting with you, then we understand that we have certain kind of weaker institutional capacity and we need to learn. That's why that all these challenges that you see, we think that these are the hurdles which is on our way towards delivering affordable housing units to the needy people. And thanks to the World Bank team and Government of Punjab, that is Punjab Affordable Housing Program, trying to somehow or other pick each challenge one by one and trying to connect with on the right side is the deliverable of the program. That how these challenges will be solved by which intervention. And we're extremely happy that after a year effort of past 1.5 years, anything which you are seeing in a green or blue that has been achieved. So this is a historical moment at the moment. Why? Because after achieving all the regulatory system development, correcting all our rules, regulation, we are on the brink, that on the red side, where we are about to launch construction from the private sector, then construction development from the public sector.
Excuse me, Mr. Imran, is it possible that the presentation can be shared on screen?
So we'll try to send you through PDF. We got a bit of link issue. We'll be sharing with PDF if you just can.
Not a problem. Yeah, please carry on. Not a problem.
Thank you. With this, if that value table was looking too overwhelming, in simple terms, our program is trying to come up with 3-dimensional reform agenda. One is the system development. Here, we are trying to be just overly transparent by putting housing market information system, beneficiary management system, program management. A couple of the systems which might be really interesting for you are housing market information system, which all the housing supply, housing demand related data they are giving to the industry, to academia, to financial institutions like you, free of cost. Other important thing which we would like to highlight as a legal reform, which we have already achieved. By that means is that we have changed the planning standard to making them overly densified and giving certain kind of businesses incentivization to the private sector. We'll be coming on to that later. There's a slide to show that how the concept is going to be look like in the real world. Then we have designed a special affordable private housing scheme rules and regulation, that how we can shake hand with the private sector. More slides will be coming that how it look like. Then we claim that in South Asia we are coming with the best joint venture rules and regulation, which is going to catalyze the private sector market and shaking their hand with the public sector, and then making of the Real Estate Regulatory Act and so many other interventions that have been achieved. But the most important that now we'll be moving forward, and that's why we called you that how to ensure the housing development, because this program is looking to construct 40,000 affordable housing units by the public sector and private sector. How our model look like? So the program is envisaging 3 kind of the model, that housing development through the public sector, housing development through the private housing societies, schemes, developer, and joint venture. One by one, that how this model look different and what each model is bringing to the table. So I'll be starting from the public sector, and why World Bank or Government of Punjab is actually incentivizing the public sector. And we would like to actually deliver housing units from the public sector. Most important, that we are not looking house as a single entity, rather we think that bringing the delivery through affordable housing, take it to the normal common citizen, to the affordable living. So there was a lot of things which we thought in Pakistan, construction market, in private sector, they were not taking place. So it's good that government start leading in that. So for example, that if we want to utilize an energy efficient technologies like solar street lights, solar charging stations, solar rooftop. So we'll be encouraging through the public sector these kind of intervention. It's going to help obviously to bring the electricity bills and user charges, reducing, and obviously not only in housing, rather improving the affordable living. Another important intervention is that how we can make that planning more climate resilient while incentivizing the rainwater harvesting, clean rooftop, or maybe introducing those kind of construction materials, the permeable pavements, etc. Then again, that it is not only about the climate related intervention, rather how to improve the how to upscale the lower bottom by socially progressing them to the middle income. It's important that we actually connect them to the livelihood. For that, if in the layout plan, sometimes we put the places for the public building and these kind of things. So can the capacity building of the people who are living there can be improved? So we are looking for that how those kind of things, maybe come up with a vocational center. Can we provide, how to provide, and why not to provide free Wi-Fi hotspots to the people so that at least enhance their learning and education. And then again, you can see Lahore, Rawalpindi, Multan, metro station is coming, or a train is coming. So how we can connect that wherever the public sector housing schemes are coming on the last mile mobility and bike sharing, that kind of concept. So these concepts, we wanted to actually make these public sector schemes island of learning, and some maybe not cheaper also, but bringing these kind of intervention. That's why public sector is incentivizing these things. Then we got a lot of land available that government has put on the table. Readily 10 to 15 parcels are available, but I just be sharing some of those. Like one of the most, for example, in Sialkot, you can see that how that the city looked like, and we got a land parcel almost 1600 canal in Sialkot that we are shortly bringing to the market for the development. So we expected almost 7,000 to 8,000 housing units will be coming here. Then again, that all the system which we are talking about, that making of the location criterion, all the stuff. So it really helps to situate these schemes near to already main facilities of the city. So again, that these might not be take 10 or 20 years to develop, rather we think the kickoff will be much faster. Similarly, for example, we got another site in Khanewal also, the red you can see, and we have already started the work on that. We advertised this to the newspaper, some of the firms have already applied, so maybe the construction and development will be starting in the next 4 or 5 months. So we got a lot of these kind of land parcels from the public sector, but I just would like to keep my presentation short. Most important that is coming, private housing societies, that how we are actually connecting them and what we are bringing. So again, that in the challenges slide we showed you that government approach was, if you can see the left icon on the house, upside down. Why? Because we were not able to mobilize suitable land, our plan standard was outdated, we took too much time to give them approval. We thought that we can actually make that upside down, right way, how the housing should look like. That's why we're pushing the agenda of Ghar, that green, healthy, affordable, and we can resilient. We can bring all those kind of angle, and how that through the rules and regulation we're ensuring. So affordable, Punjab affordable housing rules and regulation. What they say that if any private sector developer is coming, so 80% of the residential area they can keep for the market delivered housing units, but 20% of the residential they need to make either apartments or housing units, and then they will be returning to the state so that they will be delivered to the targeted beneficiaries. This is how the government perspective is to look. But what perspective we gave to the private sector? The most important, that once we are saying that how important planning standard was, this is a lengthy document of 10 to 15 pages, just to put a key thing and key message in a single slide, that how the change in planning standard will transform this industry. On the right side, this is the Rawalpindi Bahariya, the actual picture, so you can see that how right now our societies look like. So whenever any developer comes and they try to build on that land parcel housing scheme, so the problem is that 35 to 40 and something 45% of the precious land is getting wasted under the roads. Then there's some incentive that they get is through the commercial or housing. So these are the two things from there where they earn the revenue. So we totally changed that, and on your left is that how the planning standard will look like and what kind of the housing habitat it can come. It's AI generated, but this is just to show that the flavor of that what we are trying to do. So from 40%, we want to take the housing densities slightly higher to 50 to 55 to 60%. we think that it's a good incentive to earn more revenue, and within that they can obviously give the affordable housing units back to the state. Then another incentive is coming to enhance the commercial area from 5 to 15% and giving them also leverage of utilizing them as a mixed use as well. And then not only enhancing the housing density and enhancing the commercial, but we are taking care of enhancing the overall open spaces also. So again, that we think that is a match made in heavens in a way that private sector can also earn a lot of the profit, and we can bring the housing units for the needy also. So one of the Bank of Punjab representative sitting, and we'll be very looking towards them that they can share some of their experiences, successful experiences. So, for example, there was a Garden Square villas in Ahmedabad, and the same scheme was allowed near Gujranwala to the developers, Bank of Punjab, shake hand with them, and this is how right now that housing scheme look like, that under the same 80-20 formula. So they have already constructed the 80% land that they had for a market delivered units, 20% still vacant, and then the housing will be coming. So these kind of experiences, that how the bank can connect with the developers and then they can come to the state. So this is that how that affordable private housing scheme is trying to unpack the private sector appetite. Now, most important, I think one of the most exciting thing which our program has brought is joint venture. Again, a long document, almost 200 pages, but in short, a single slide that whenever we say that joint venture or public-private partnership, what do we mean? So, as a concept, you can see in a top square any land parcel. Public-private partnership or joint venture means that we are very clear, a very simple definition, that in that public sector will be contributing to the land. So we will be offering the land to the private sector that will not have any kind of land title issues, ownership, and that will be the clean land. And private sector will be coming as an investor and as a developer. So that's why here comes the role of the banking institution to how to actually support that kind of appetite. But in definition, some of the things how it look like is that, for example, that private sector developer offer us that they can going to develop almost 50% of area housing units. So 15% of that land or the freeholding rights will be offered to the private sector. But again, that this is the competition that will be launched, and obviously we will be offering these kind of land parcels under joint venture for those kinds of bidders who will be giving us a maximum amount of covered area, constructed housing units, but in lieu will be asking the less amount of the land. So this is how it will look like. But again, that why the government is coming up with that we wanted to save certain money from the kitty of the government, but wanted to give a bigger leverage to the private sector that they can plan, they can come up with their own construction material, and we wanted to actually utilize that capacity. So this is the for example, the new land can also come, and then we have done our research, and then there are in Punjab Housing and Town Planning Agency, there are land parcels available right in the center of the city. I'm just giving you an example of Sultan, and here is that this all schemes 20-30 years back had been developed, but there are certain even that Sultan Metro, there are certain land parcels adjacent to that is totally vacant, and we think that this is a great pocket where these kind of low-hanging fruits can be unleashed. And this is not one; it is in dozen that we would like to bring to the market. So from public sector delivery of the housing units to the affordable private housing scheme developers to the joint venture. So this is a big menu available, and then the World Bank is supporting us over there, $250 million. So money is available, and again that this roundtable is here, where we will be all actually supporting each other in how to unleash this market. Over to us now.
So number one is the mortgage finance for the individual households. How we can increase that bracket? Initially, if we see the numbers that are only like 1% or the 2% of the total portfolio, that's a very minimal. And the second is the upgradation of the existing units. And the third is very key element that will be play a key role in the success of this program as well, that is developer finance. And yes, these terms are not maybe routinely practiced in our market, but we have few exceptional cases like the Ahmedabad case of developer finance by the Bank of Punjab. It's a very, you can say, ideal example of the theoretically very perfect example to learn about the developer finance and the writing of the mortgage via the payment of the individual beneficiaries. And the third is the innovation in this segment or in this area. So the current practices are the very rigid or the very difficult for the informal sector workers or the lower income, middle income family person to get a mortgage finance for 15 to 20 years.
Of the income distribution. So that was the idea, but then we all know after the budget became effective, 2023, and the MPMG program got suspended soon. So the affordability then all of a sudden became a huge challenge that we are all facing. The good news is that you heard that there are a lot of supply coming online through public sector window for the core housing and through the affordable private housing schemes. I think the existing approvals already amount to 7,000 units in the past years. And the new units approved are coming online. So altogether, I think there are at least 10,000 that we're looking at, 20% of which is the affordable units, right? That's where we hope that we can actually get more of your insights, given your past experience in underwriting mortgages, what will be, potential ways of moving forward to serve these previously underserved populations. From a mortgage point of view, from even, developer financing point of view, because we all know that in the past is more developer-led installment, right, payment plan. Very few of them actually, then eventually utilize, or the consumers utilize mortgage financing. I'm sure that you have a lot of stories and insights to share. So we are hoping that we can learn a lot, and then we can jointly help some of the innovations and solutions to, help the Punjab Affordable Housing Program and even beyond to really serve this previously underserved income segments. I hope that I made it little easier in terms of the objectives of today or more concrete. If not, please just let us know and we can get it clarified immediately before we move into the very detailed questions. Some of, I think most of you have already received them, right? Okay, good.
So Matt, would you like to say?
Yeah, so I add a few cents. So having written like a housing microfinance institution business plan, I would also like to frame this in a way that if we try to expand financial access within the income distribution, then not every household may be suitable for, let's say, a long-term 20-year low-interest mortgage. So we would also like to understand what would be a suitable product and what would be the product terms in terms of loan tenure, interest rates, if we go further down market to households who actually have a lower income and may have, let's say, a lower payment capacity per month. And then how to bring them in, offering them let's say, a housing micro mortgage or even below a housing microfinance loan may be better than not offering anything to them. And so if we expand the palette of options of financial products, we may be able to give them like a smaller loan initially for the core house, and then there may be a subsidy or a price reduction for the core house, so the core house is actually suitable to start with. And then once they have developed a financial history of repaying that small loan, they may climb up the ladder in order to finance the first extension of a core house with a slightly better, slightly longer tenure, slightly lower interest rate loan in order to kind of build up their financial history, and you grow your client portfolio that way. Okay. Yeah, over to you. I guess we will be getting into the details of that later.
During the NPMG retreat, we actually started with a developer finance at board in Avari. It was a project in which we actually financed the developer, and they built about 415 houses, out of which the developer finance was later on converted into housing loans. And out of the 435 units, we actually financed 315 units. Rest were purchased at cash value by the occupants. So we don't have any NPL in that by now, and the loans are going great. The targeted market segment was the workers who were living nearby, because that was the kind of the market it was. And we actually evaluated so many cases on income proxy model as well, and it went very well. And even our experience with regards to MPMG is great. I think we just have 0.01% of NPLs in NPMG. Thank you. Anyone?
Madam, in continuation of that, while selecting the beneficiaries for MPMG, so most of them were from the informal sector. So that means you didn't go for the traditional credit assessment for those beneficiaries.
We did go for a traditional income assessment where it was possible, because there were some self-employed individuals, like they were having their karyana shops and their street stores. But most of them were through income proxy model as well. We actually initially we did not had so much confidence on the income proxy model, so we ran both income assessment and income proxy side by side. But later on we switched to income proxy altogether. We just made some few adjustments to it.
So that particular innovation you made in MPNG, can you replicate to them other projects as well? Do you have confidence in that?
Yes, right now we are doing 3 different projects with Government of Punjab. They are all under our window. 2 of them are SME lending schemes, and those are 100% digital. And we have proxy models on which we actually evaluate the SMEs on their cash flow assessments. So I think over the period of time we have done so many of such schemes that we have developed our internal systems and our internal what you call comfort on the kind of assessment we do, which is cash based or which is feasible for economies which are not much documented, because alternative data points are not that much available, so we have to rely on our experiences. That's all.
So you only consider for the household head income, or
no, we had been clubbing income where there was a spouse available who were earning. But yes, we were selective with regards to the kind of customer we were looking at, because if there is one of the household is earning, so we will take their cash salaries, and at the same time we'll do for assessment for the other partner.
And right now, do you feel any appetite of such kind of projects where you can have a shake hand with the developers and the beneficiaries?
Yes.
Yeah.
Jump in and just ask a few questions in terms of getting clarity on this program. And just as a background, I think when we were looking at NPC design, NPC was trying to address 2 issues in the sector, in the housing, particularly the low-cost housing segment. One of the issues was the supply side of low-cost housing, and I think what was mentioned here was that there was basically only one supply from the public sector which came in, because again, not that large. The supply remained an issue throughout that program, and therefore it was closed. The second issue which we tried to address was the affordability of the low-income housing people, right? So these two, in the low-cost affordability segment, There was mentioned by Zhang that I think there was a key program, subsidy program offered by the government. From the demand side, we came in terms of interest rate subsidy programs. So these two, so what is the program right now? What is the supply? And we just mentioned the supply from Starbucks is going to be coming in. What kind of supply are we talking about? Numbers, delivery, what is the cost of those? Because the financing part of it will come later unless you have the supply coming in. So if you can answer these two questions, then we can move forward.
Yeah, Mr. Mudasa, thank you so much for raising that critical questions. If I may just help address that, exactly what you mentioned in terms of the major issues even under the NPMG schemes, right? The tier 1 is the one that is really lacking in supply, and most of the loans are going to tier 3 and tier 2 as we actually expected. For disclosure, I was part of the housing finance team as well, supporting the World Bank side in that Punjab affordable housing finance project. So we were part of that process, designing, even helping to design the risk financing facility, where the pricing and the parameters are also really targeted around supporting the MPMG different income segments. And we have been facing this issue about tier 1 supply. Now, that's exactly why we're designing the Punjab Affordable Housing Program. So we're working with one of the most populous provinces in the country to then solve that supply side constraints, what Imran was introducing. Many of the interventions in the project is just remove that private sector constraint to the private sector in delivering more, right? So 2 major schemes and the JV. JV, might be a little bit kind of down the road with the rules and regulations new ones are being reviewed and approved. For the private affordable housing schemes, we're looking more at those that are to be mixed with that 80% of the market rate. So by nature, it's not going to be too down in the income spectrum because of the mixed nature. You have to have that entire place to be marketable for the private sector, for the developers. So we're looking at actually decile 6 probably and above now in terms of income distribution. But the core housing window, we're really aiming to serve the lower bottom 40%. What core housing? Sorry. If I just complete that description of core housing, is actually to use public land, in this case mostly coming from PAHP, then to develop using more kind of poor kind of standard, smaller lots, and then smaller core unit where you have like a mixed use in nature but with a toilet, essentially, right? It can be horizontally done, it can be also vertically done, learning from experiences globally, so that end users can then expand it over time once as their financial means allows it, no? So that the initial outlay of the capital or the payment needed from the end user will be much smaller compared to a build like 1 BHK, I don't know whether you use this term or not, or 2 BHK type of unit, no? In terms of supply numbers, we actually checked with also PAHP yesterday. The older schemes have 7,000, right? 20% of which will be the affordable. Affordable is kind of, if you can relate to it, the tier one structure better, you can consider that 20% is the tier 1. It's not exactly the same, but let's say that is tier 1, no? And then the core housing will be mainly tier 1 or even tier 0 as we know it, the MFI window that was discussed and designed as part of the NPMG program as well. The new private affordable housing schemes coming on, and please correct me if I'm wrong, I got the number yesterday, is 4,000, 20% of which will be affordable tier 1. So we are looking out of 10,000, let's say roughly, there are 20%, which will be 2,000, right? Affordable units, tier 1, that are under, the pipeline. I would put it that way. It's not big amount, but considering what you have been doing, even Bank of Punjab of 500, this is actually a substantial amount coming. And I heard that there's good news this morning. The policy rate is reduced by 100 bips. Yep. I think the enabling environment is becoming better. So it's a good and opportune time for us to think harder and collectively how then we can trigger that market, given that the MPMP one is performing quite well, but of course with the interest rates, subsidies involved in it. So let me just pause here, taking out too much of your time, but I would strongly encourage that we actually talk about probably starting from the portfolio side of things. How much mortgage are you doing in each of your banks? What is the average ticket size? What is the tenure? What is the interest rates? And then if you have the MPMG program, we can talk about that too. So we wanted to get a big picture first before going into details on the income segment that we're targeting. Just get a better feel. Thank you.
I thought Ben's suggestion is good. In a way that if we can give 3 minutes to each participant and have a round, so that a quick products, your side and side will be coming, then we can go to the detail and questions answered. So if from the one side, from the stand side, each participant can take 2-3 minutes of what they are bringing to the table, that will really kickstart us.
Public sector, because when bank goes into lending, their most questionable is that who is the owner of the land and who is take the ownership for the finishing of that vertical project. The main question.
So before going into that detail, we would request if everyone can share their current portfolio, some of the number about your current portfolio, average ticket size.
We are actually signing 2 projects. One is Hafiz Banu in Islamabad. Then the second one is the Sky Garden in Karachi. But they are at the very beginning stage. So we are not able to lend a single financing to the individual.
So currently, your bank is not doing mortgage finance to the individuals?
Yeah, we are going to individual, but for the developer side.
For the developer side. And for the individual, how many what's your portfolio for the individual?
1610 units.
1600 right now. Active loans.
Active loans.
What's the average ticket size?
8.5 billion. Ticket size is 17 million.
17 million.
No, average loan.
Average loan ticket size 17 million.
Okay, so you are pretty much dealing at very high.
In conventional side. Not in MPMG.
Okay.
So not in MPMG.
In MCB, we have active loans of around 1,400, and the portfolio size is approximately 8.5 billion, with average ticket inclusive of MPMG is around 10 to 11 million. The MPMG number of accounts are approximately 1,200, and 250 to 300 are the standard home loan customers. We are offering all the variants, like for buying a house, we offer loans for construction, to buy a plot and construct, and for renovation purpose. So we have all the products on our menu card. And the challenge, like you discussed earlier, that at the MPMG, I guess the biggest challenge was that of less funding in the tier 1 is that while floating that product, we associated the tiers with the land size. I guess it would be ideal to link it with the loan amount. Because we came across certain instances where people have bigger piece of lands under their ownership, but because of the size, they couldn't even avail a smaller loan, just because they're crossing the next tier. So I would suggest by designing a product, it's better to link it with the loan amount or the profile with the customer rather than with the plot size. Thank you.
Well, in MPMG, the low-cost housing, we have around 2,000 odd customers with 8 billion property. And the best part was that the good thing is that there is zero delinquency in that. I mean, forget about default. Not even a single account has gone into the early delinquency. So this actually signifies that the low cost housing and people with a humble background are really very, very good at paying. Going forward, it's the way Bank of Punjab has done if they've done the developer finance, of course, the final products file, consumer also goes to them. Way forward, if you're going forward for any syndicate lending, where a few banks actually participate in that, then we can come up with a good consortium and this can fly. That's what I believe. Thank you.
What's the ticket size?
Of the low cost housing or our own bank? Overall is around 21-22 million. And in low cost housing, that segment we had around 5.5 million.
Rupees.
Bakh rupee.
But we are not talking dollar loans. This is the World Bank here. Yeah, but the thing is, we need to keep in mind that this is a World Bank sitting here, so we need to be more specific. The World Bank are not very well paid. This is what you think. No, I know.
Thank you.
Assalamu alaikum. My name is Mohammed Naveed. I'm from National Road Sport Program, NRSP. Being an MFI, we didn't given big loans, but we have a partnership with the Bank of Punjab, and we are implementing Apna Ghar Apni Chhat scheme. And currently we have about 3,000 loan dispersed under this scheme, and about 4 billion have been paid. But conventionally we didn't pay for housing. We just paid loans for renovation, not for house construction. We are paying 1.5 million each loan. ACG. Yeah, with zero interest rate. This is a small house. This is a small house size, about 3 to 5 marlas, and people are doing their work by their own. We are not giving them any engineering support or any construction support. We are paying just loans, and people are making their home by themselves.
And what is the tenor of the loan? How long?
It's about 9 years.
And these will be paid in 2 tranches, right?
Yeah.
So, what triggers the second tranche?
It's about roof level of construction. When a buyer reach on roof level, we pay second tranche of 0.75 million.
So, how do you confirm that they reach the roof level, and do you also send an engineer to check the quality?
Yeah, we have engineers. This is a we can say digital our program. We have our engineers there. They took pictures and upload in our portal. We confirm, and then we pay the second tranche.
Do the engineers also do some sort of quality control, or is it only quantitative?
There's some level of quality there, but we don't implement any strict controls on them, because it's a 1.5 million just they used to construct by their own, and we just confirm that they are making their own house. That's the main theme.
I would have a follow-up question. I understood you said earlier you did home improvement or renovation.
Yeah.
What was the scheme there? So what's the ticket size and the interest rates and tenor? And was this supported by government, or this was just market-based?
That was our core program. That was also a loan, just loan for renovation. The ticket size was about 5 lakh, and 37% our service charges price, and the tenure was about 24 months.
Thank you, Mr. Imran, and all the other participants. If you allow me, first of all, I really appreciate for being invited for this session. I will be the first one to admit that I do not have a lot of visibility to the programs that are being talked about. I will share some of my observations and maybe put some questions on the table that should be considered. This whole session is about affordable housing for the low income group. Two things which I feel should get a lot of attention from our side, but I have yet to really hear in any quantifiable term that when we say affordable housing, so is there a price point or a price range that is part of the plan? Likewise, when we say lower income group and we talk about the bottom 40%, do we have any income level that has been thought through and the linkage between that income level with the affordable house that can be sold? Just to put things into perspective, as far as the MPMG program Tier 1 was concerned, its lowest price tag was 3.5 million rupees worth of loan, which practically means that if today any institution wants to give a loan for a house that is costing 3 to 3.5 million rupee to a person which is earning 100,000 rupees per month, then they would have to give about 40,000 rupees over the period of 20 years as part of their installment. And just to put things into perspective, the minimum wage in the country is about 37,000 rupees. So the monthly installment will be more than the minimum wage. And if we take an income level of 100,000 rupees, that will be about 2.5 times more than the minimum wage. So these are some mathematical relationships. These are some hard socio-economic realities that must be considered. That when we talk about affordable housing, what can be done to bring the cost of the house down rather than just focus on interest rate subsidies and these sort of things. One thing that I would like to share with the group here, that I think we should be clear in our minds that perhaps the solution of urban housing problem is in terms of going vertical, not really horizontal. And also, when we say vertical, it should be medium height rather than tall buildings, because the tall buildings, the kind of construction technology that has to be involved adds to the cost of the house, while when we are talking about medium height buildings, that cost can be relatively low. Also, the fact that I heard one comment that perhaps we can start by giving small loans so that people can build something small and then they can build over it over a period of time as incomes increase. Now, to my mind, this is the perfect recipe for creating a slum. And we have many such examples in Pakistan and elsewhere. So again, any housing project that is purpose-built, which is vertical, which is built under certain codes, and those codes are respected, adds to the long-term sanity of a city. So again, these are some of the thoughts that I wanted to share. Another thing that I would like to share here, that with reference to MPMG and in general conversation, there seems to be a lot of emphasis on subsidized interest rates. I can have a separate discussion on the subject, but I would strongly advise and advocate to move away from subsidies that are focused on interest rates, because they do not add to the affordability of the borrower or of the loan. They only increase the size of the loan and in turn have an impact on the choice, but do not necessarily have any impact on the on the affordability of the borrower. Another thing which is critical to understand with reference to MPNG scheme, that contrary to common belief, the most important factor why any bank or any institution does not have very practically speaking, any defaults to talk about is the fact that the monthly installment on those loans was fixed for 5-year period. So when the inflation went through the roof, there was no impact on the monthly installment, and thereby no impact on the borrower's pocket immediately. That is something which is missing, and I think it needs a lot of attention that when we are talking about these mortgage finance schemes, we should be clear in terms of coming up, or I would say creating an enabling environment where the mortgage financing lender can give loans that are at least ensuring a fixed EMI for 5 to 10 year period, rather than EMI getting repriced every 12 months and the borrower being subject to very high volatility of the monthly payment. My suggestion would also be that I think strong consideration should be given that when we are releasing government land to developers, we should release the land at significant discount, but with very stringent conditions that their focus should not be on any sort of so-called luxury living. Their focus should be on function living. So the size of the house, the amenities of the building, amenities of the apartment should be decided by some sort of a civil engineer or architects who have expertise in terms of really low-cost housing, small houses with vertical buildings from elsewhere in Asia, and we have great examples over the last 30-40 years from Asia to learn. That they should follow that in order to keep the price of the house down, because that's the primary factor which makes it affordable. Also, coming to the mortgage lenders, we spoke about the success of MPNG scheme. I think most important success factor to that scheme was that because of the regulators' strong motivation, the whole banking sector projected the mortgage financing as a solution and as a product in a major way. That's something which has been missing in the past, and that is again something which has been missing for the last 2.5 years. In order to motivate the mortgage lenders, it would make sense to consider giving some sort of a tax break to mortgage lenders to motivate them for enhancing their mortgage portfolios. Right now, as far as the financial sector is concerned, their biggest gripe is a very high tax rate that they have to bear. And if, as part of this scheme, a significantly lower tax rate can be considered primarily on their new mortgage portfolio, it will be a significant motivation to the mortgage lender to allocate funds and actually aggressively fund that product. So these are some of the observations. As far as the HDFC's own portfolio is concerned, we have about close to 10,000 active borrowers. Over the life of the institution, we have given about 450,000 mortgage loans over past 70 years or so. Our average mortgage ticket, which was about 2.8 million rupees somewhere around 5 years back, has now come up to about 6.5 million rupees because of the increase in the cost of construction and other inflationary impact. Our total mortgage portfolio is about 14.5 billion rupees. So these are big details. We do give loans both for purchase of a house as well as for the construction. We do give loans to salaried as well as to non-salaried class. We do use outside agencies for income estimation of non-salaried class, especially ones that may be in the informal sector. So that's briefly the input from my side, and if there are any specific questions, I would be happy to address them.
First of all, I would go with the Askari Bank portfolio. Just likely to say about the overall environment of the mortgage right now. So if we see the what just go through with the SPP compendium, you can see that mortgage portfolio is basically declining trend from 2020, almost 2022. So it is from 220 billion right now. It is around 205 billion rupees. And the second part is the infection ratio. So infection ratio is also basically increasing. So 4.9% at the end of 2022, and right now at 2024 it is around 6.8%. So that environment basically shows how where this segment is basically going. And in this particular sort of situation, now we are in a state to facilitate to the lower segment income. So before I come to that lower income segment part, that how can we strategize the thing or how can we overcome the challenges basically to facilitate this segment. So first of all, I would like to tell about now the portfolio of Askari Bank. Right now we have around 8.7 billion rupees portfolio, which have around 1400 plus customers. Ranging a ticket size from 8 million to 13.8 million rupees. So you can see there is a variation, there's too much variation from you see the lower and the upper part of the average ticket size. So this is basically the portfolio. Now the important part is how can we see facilitate the lower income segment part. I think first of all, few of our colleagues, Mr. Irfan Saab, I think he was spot on the basically challenges. So when we talk about Imran says that there are too much challenges in his presentation side. So I was actually just going through that slide and I just basically thinking of that what should be the key challenge. So I think in terms of if we see at the customer perspective, so we actually realize that the payment capacity is basically the key challenge for the customer. So how he will going to basically pay the installment till maturity. So when we talk about MPMG, rightly so, yes, in Askari Bank also we have around we have basically disbursed 1.18 billion rupees of around 311 customers. So yes, there is no such if we see that no such delinquency is there in the NPNG portfolio. But if we see the markup pricing right now, so which is actually fixed at that time. So 5% or 7% as per the tier 2, tier 3. I think you remember that 5% is for the tier 2 to 7%. So it basically it's still now basically at the same rate. So after 5 years or 7 years, that need to be looked at that how this portfolio goes, and for that purpose, I think few of our banks have already coverage it through the PMRC risk module. So just to support that NPL part or the loss part of the principal amount. But now, if we simply see how can we basically develop this product. So I think my suggestion is first of all we need to look at. We should assess what should be the low income salary band. So we have to assess first the income band of the low income segment. So what should be the low income segment part? Because right now on an estimation part, for example, if we disburse a loan of rupees around 7 to 8 million rupees with the markup rate of 15%, so installment is about 90,000 around EMI. And for that, if The 50% DPR if he hasn't taken any such loan or any credit card of him. So ultimately he will be around 290 or 300,000 rupees to afford that loan. So we have to first assess what should be the income segment of the customer. Accordingly, we need to develop that product. So that is the only suggestion from my side, because there are too much things interrelated with that EMI part. It involves basically of course the cost of the land or the cost of the building ultimately, or the apartment. Certainly the markup rate. We need to look at the pricing strategy as well. So either the fixed one, the variable one. Mr. Irfan said very truly. Ultimately, if we go with the variable one, so it will be very difficult for the customer in later period to pay the installment. And I think there is another part which is the hybrid pricing model. So hybrid pricing model is in fact is a very sort of a supportive thing in which we actually empower the customer to opt which one is the best option for him to pay the installment. So that's a few suggestions from my side. Thank you very much.
Who is the world biggest industry microfinance organization? It's a microfinance institution actually. So I'm not aware about the commercial side and commercial banking. I would more be talking about the microfinancing side. As far as the Hood is concerned, we have been associated with the housing finance from last around 7 to 8 years, and we are providing housing finance to the low segment of society. And the maximum loan size that we are providing out is 1.5 million. Around more than 80,000 loan has been financed so far, and the active loans are around more than 66,000. The amount which we have disbursed in accumulated is around 58 billion Pakistani rupees, and our outstanding loan portfolio is around 44 billion Pakistani rupees. So it's quite high, alhamdulillah. And our model is totally different actually. So we don't receive any money from the commercial banks or from any institution where we have to provide any kind of interest or the cost of capital. So we receive donations, we receive grants, and we receive interest-free loans from the government, from the corporate, and from the individuals. And we provide loans to the low segment of the society. So this is our whole portfolio. And alhamdulillah, we have been engaged with the different government schemes. If we talk about the Kamya Pakistan program, which was initiated in 2019. And in that segment, we are also providing housing finance to the people. And then we have been collaborated with the Ministry of Housing and Works of the federal government, where they have allocated around 7 billion Pakistani rupees to Akhud. And similarly, we are providing loans to the low income segment of society to construct their houses, to renovate their houses, and to repair their houses. So there are three segments. The first is for the new construction, and second one is that you are living in your house and you need another room, another kitchen or washroom, so you can build it. And third one is for the reconstruction of the houses. And similarly, recently, 5 to 6 months back, we have been associated with Bank of Punjab and backed by the government of Punjab. I'm talking about the Apni Chhat Apna Ghar program, which is ACAG. So we are also key part of that. And from last 5 months, by the grace of Allah, alhamdulillah, we have disbursed more than 30,000 interest-free loans for the low-income segment of society. The maximum loan size in that particular scheme is 1.5 million rupees. And the average loan size that Akhud is running from last 8 years is about 9 lakh rupees, right? So this is the small progress and portfolio that Akhud is running from last 8 to 7 years. Thank you, ladies and gentlemen.
Yes, we offer for self-purpose for SLE, SEP, all segments. I have a document for you, for detailed document. I will submit to you. 7 million.
7 million.
Overall portfolio of Bank Abdullah is around 25 billion with a average ticket size of 6 million. Active customer are 4,100 blocks, including MPMG.
Do you have the distribution of your customers? I know that everybody is asking for averages, but is there a distribution of
No.
from what's the maximum minimum?
Minimum is 300,000 and maximum no limit for us. We recently we have disbursed around 300 million case.
300,000 would not be out of the question. It would be a minimum.
Yes, it's a minimum. It's a minimum amount which is being lent to the customer.
I really appreciate that you are wearing your uniform today. Where is the rest of the team?
For MTMG, we disbursed 8 billion on TMG and the active customer are 1800. Average ticket size is 4.4 million.
So because we are almost at the end of this round and I have to leave Shehnaz, what collectively speaking now, what has been the experience of the former scheme, MPMG? I mean, was that a breakthrough?
Yes, of course. There is no NPL, excellent experience, no NPL, customer is paying regularly. Great.
We have less than 1% delinquency. No NPLs yet, but when the rate gets revised, then we will see the health of the portfolio
after 2 years.
Picture.
MPMG was kind of a mandated intro for all the banks to get experience of the mortgage finance. And I think a common experience that everybody has got out of the MPMG was that small ticket loans on a fixed interest over a period of time result in very low delinquency, which is, I think, everybody is saying the same thing. And that is the take-up and the confidence that most banks got out of the MPMG was, if somehow interest rate is fixed over a period of time, because, so if you just assume that the interest rate was not fixed for these customers, so what would have happened was almost the installment that they were paying would have been, the market would have gone higher in some cases. Only the market portion would have gone higher. Exactly, the principal outstanding for these loans would have remained same for the last 2.5 years. And when they would have gone into the floating rate regime, their principal outstanding would have been more or less, at least much higher than when the interest rate was fixed, resulting a higher impact on their DDR. So I think there have been people saying that interest rate does not play a very critical role in mortgage finance. I think interest rate fixation was one of the biggest reasons for this scheme to take on. That's my view.
I think MPMG success only because of state bank driven program or
I think that was a given because the push that the state bank gave necessitated the banks to enter this scheme whether they liked it or not.
Yes.
You know, but now that we have gone through that experience, I think many of us as portfolio managers have the confidence to tell our banks that, okay, mortgage finance is an area that we should go ahead and extend financing, primarily because we have developed this confidence over the last 5 years. All of us together have now experienced this, that these customers are not bad. Just like, we go and, why do we go for auto finance very easily? It's primarily because we can easily repossess those assets.
Exactly.
And dispose it off.
So what would it, this is very interesting, sorry to cut you, but I would like to also then, for you all to respond, that what would it take under the current context for the banks to now come in with this experience to get into affordable housing? I mean, the interest rates are not fixed and likely to get fixed. We are not talking about interest rate subsidies from the World Bank side. We are working very hard at bringing down the cost of the unit, and I can come to the details of that. But what would it take for the banks to get into this segment again?
If we take asset-based financing, most banks would prefer to go into assets which are easily repossessable. And I
and I don't have to go to for a recourse to anyone, and I can dispose them off.
So
Very easy.
is that house not easily repossessible?
Not right
Not at all.
So what would it take?
Even under the section 15, the process is such that I'm not sure
3 months
anybody
to 4 months.
has been able to do it anywhere less than 6 months, and even then, when we go for the disposal of the asset, the possession remains with the borrower, and you have to engage a party who is willing
To buy this.
take possession, who is willing to buy the property without possession, and possession taking in Pakistan is only a job of you know who. So unless the possession is guaranteed, so one of the models that I have always thought about is, going vertical, take it, and then, just like a build, operate and transfer model. So somebody who probably can be the government can ensure the rights of financial institutions, that in case we want to repossess, somebody will ensure that we can get the possession of the asset. The only problem right now is, under section 15, we do not get the possession of the asset at the time when we want to sell it. So,
Can I something?
Yeah.
Yeah. So, I'm just going to, I think we've been, talking about it for the longest time in terms of foreclosure laws. Okay. The foreclosure laws.
Foreclosure law has been somewhat addressed under the section 15.
Yeah, I mean,
and since I think.
Come to that. Isn't foreclosure law already in place?
Yes,
it is in place.
Not in a true spirit. That's okay.
So again, what would it take to?
So I think, and this is where I was coming to. I think one of the things which I think just to what Adnan has made a very very important point. Okay, 2-3 things which fundamentally we have to understand from a consumer lending point of view. Okay, it's a low margin product, high ticket product. High ticket. Okay, these are the fundamentals. Okay. Now the thing is, any of the loan goes back, single loan with a high ticket, it completely takes the profitability of that particular product of the mortgages, 1 or 2 loans, because they are high ticket. Okay. One of the models when we talk about, I think one of the person mentioned about the models in South Asia. Okay, one of the successful models go to our neighboring country like India, where when you do a mortgage, the asset is in the name of the bank.
Yes.
Okay, we need to understand, and that's very important. And that's a very, very successful model in that part of the world, where the asset is in the name of the bank. Once the complete outstanding and installment has been paid, that particular asset is transferred from the bank to the consumer.
So why is it not the case in Pakistan?
Again, there are laws. Okay,
So even
Other than law, it's already cost involved with the transfer of the property.
But it involves a lot of cost.
A lot of cost for the transfer of the property.
Yeah, the transfer cost is
1 canal house is around.
Is there a tax or a fee or a stamp duty?
Yeah.
Because when you're doing this,
So you have to pay 0% tax in advance to the bank, then to the cash it to the customer.
No, so they're right. Shehnaz, what's been happening, and I think we need a role of revenue representative over here, because if there is a cost to a mortgage and that cost is linked to the market value of the property, so 1 or 2%, and when you're talking about a low margin type of a business, then their entire model falls apart.
Yeah, and that's the reason that then you go for stuff like token registered mortgage to bring the cost down, where the property does not become.
It is weak.
Yeah.
Yes.
Then you go for a weaker model.
Yeah.
So I've been hearing this thing. What we have a situation for tier 1, is, and the best way to describe it is a weak market. It's a weak market. The buyers, the sellers, the price point, the role of information, it's really weak. So what we have is a weak market. It's not that there is not demand for it, or not that people are not asking for housing, or there is not a housing problem in Pakistan.
there is a housing problem. Even in that thing, people have two opinions about it. Because if you look at the raw numbers, some people say it's a housing problem, some people say it's not that big of a problem, but there is. But what we really have is a deep market, and in that market, the role of the government is the most poorly defined, most poorly defined. So sometimes we are giving interest rate subsidies, sometimes we become a regulator of sorts, but internally within the government there is no focal point which is looking at housing finance or affordable housing as a day job. You understand my point? Sometimes it may be with X agency or Y agency, and HPFC. If you look at the public sector, the people who have been here in this business the longest, they don't have even a voice at the table when it comes to provincial programs. So provincial programs are very independent of anything which is being done at the federal level or by any federal agency which has been working at it. So the consultative process within the government is very deep. Number one, we do not have enough programs and options that we can actually talk about discussing the portfolio. And finally, the architecture. This time I'm talking about the architecture of the house in terms of bringing costs down. What type of models? There's absolutely no visibility. So what's really happening is that it's just expectations. So in my mind, I come to a number that 30,000 to my mind looks affordable a month. I don't know. Perhaps it's Wednesday and I feel like it. 30,000 is affordable, but there is no evidence behind it that whether it is actually affordable or not. Similarly, when it comes to the housing unit itself, we've been unable to break through into an affordable unit. Somehow, after 3 Marla, there is that 6 million and above. That is what I think is affordable. There is a reluctance to look at, because I think that presentation is yet to be made in terms of giving visualization that you can have affordable housing, and with due respect to HPFC, that does not look like a slum. And in fact, the problem with affordable housing is that you have housing regulations which are primarily geared towards the high income segment, and they are really not geared for affordable housing. So what people actually do is that they start cutting corners on the regulation to make the unit more affordable, and then it sets in place a dynamic through which you have these type of weaker institutions when it comes to mortgage. But essentially, if you look at the purpose of this workshop or this conference, if you look at housing finance, there is absolutely no coordination between the banking sector and the Board of Revenue, which is the provincial government, when it is actually deciding upon the rates of stamp duties for mortgage and all these. There used to be a time, and I remember 25 years ago I used to work in the finance department, when this mortgage was a fixed mortgage. It was not percentage based. And then people like me, had this brainwave that let's attach it to the market value, and all of a sudden we will have a lot of revenue coming. What has actually happened is that revenue which would have come has simply dried up because nobody wants to go, because it's a very big cost. It's a very big cost. And Imran, if you can actually confirm with the Board of Revenue that what is their sort of duties and rates as far as mortgage is concerned. But I think now everything is market based. There's hardly anything which is fixed. So it is linked to the value of the property, and that makes it prohibitive for any financial institution to undertake that cost.
There's one more thing.
Assalamu alaikum again to all my colleagues sitting here, and a warm welcome to all the foreign delegates who have taken the pain to listen to our pains here and work with us on this. So first I'll give you my numbers. At JS Bank, we've got a portfolio of 11 billion, roughly 7 billion on conventional side and 4 billion on the NPMG side. With tickets of about 1,200 more or less, both combined. So this is the number that we at JS Bank have been dealing with. So coming to this extended discussion that has gone beyond the introduction of the numbers, I've been in this business of lending on mortgages since 2003. Learning from a lot of colleagues sitting in this room, working with them. To name one is Mr. Avari, sitting at the head of the table, who has been my mentor and the main guide on this piece. He stepped aside for a while and we continued on this journey. So the subject of affordable housing, to start with, there is a definition given by the central bank in the housing finance PRs, which says that low-cost housing will be a housing unit whose value should not exceed 3.5 million. And covered area should not exceed 850 square feet. That's dated for a while now. I believe for one, the regulator needs to review this number, because this is something which today cannot be categorized as low cost and affordable, like so many of you have also mentioned this. Regarding the affordability part, we all understand and agree that vertical housing is the affordable aspect compared to any horizontal projects. But unfortunately, we people don't have the mindset, especially as Punjabis living in the most populated province. We do not have the mindset to go vertical. We need our own land, we don't need our own roof. God wonders what we want to do with that. But that's the mindset that needs to be changed. And the other part is that affordable housing needs to be driven by the governments. Since 1947, I believe there have been announcements of multiple housing projects by different governments. Nothing took off. The housing policy was structured somewhere in 2001. Housing became an industry quite late. And Mera Pakistan Mera Ghar, MPMG, was the first government-driven housing scheme policy that came in. Since 2020 mid, Pakistan had a portfolio size of 100 billion rupees. But within 2 years, that portfolio jumped to 220 billion, thanks to that one scheme. So all affordable housing schemes need the government at the back of it with concessions, not concessions, I wouldn't say markup-free concessions, but other concessions like cheaper land, making land banks, giving that public land for that construction. So this is one project that has gone up. Affordability, how has the real estate gone out of the affordability, is not because of the markup rates. It's because of the property values that have jumped in multiples. Theoretically, properties multiplied, they didn't multiply, they increased year on year in percentage terms. But since 2004, they started multiplying. In early 2004, 5, 6, they really multiplied to the extent of 3, 4x. And today, since MPMG came in, the smaller plots, like the 3 marlas, the 4 marlas, 5 marlas, since they were in demand, so their values have also gone up. So even they have now gone out of the common man's reach. So that's my better longer 2 cents on this to contribute to this discussion. I hand it back to you guys. Thank you.
Without the intervention of government, when we are offered subsidized rates or markup subsidies. So one important point which we are missing over here is that the kind of group we are looking at, and somebody already quoted this, that in the past NPMG customers did not defaulted because their installment was fixed. So a fixed installment regime is the key for this kind of group, because when they take loan, what our experience tells us that they actually evaluate how much they have to do, they have to pay as an installment and whether they can afford it or not. So if it's gonna be a more burden on their pocket in years to come, it will become difficult for them to pay back. So I think interest rate subsidy is very important. Number two, we were talking about the English mortgage and its difficulties. I think we should have a model where once all the stamp duties and other charges are paid at the time of creation of mortgage, at the completion of the loan repayment, I think it should be transferred without any fee, so that it's easier for the customer, because they purchased the property like 20 years back or 10 years back and it was in the name of the bank, so they don't have to pay it again. And number three, one important point which is missing in Pakistan is the realtors regulations. We don't have during the NPMG regime, we also encountered difficulties and challenges because there is no rules and regulations which governs these realtors in our industry. So if we have some control over them, it's going to add value. And lastly, an important factor is that Shehnaz just quoted that there is the kind of program they are looking at does not involve any subsidies or credit loss coverages. So I think to keep all the banks engaged, there has to be something which can bring them to the table and which can convince them to look at building a portfolio, and some kind of comfort should come which should make the banks look into this kind of portfolio. Thank you.
Interest rate discount, I don't mean that we provide, that the current interest rate is around 10% right now, for example. I pick up a spread on 2% and I give a customer a loan to 5 years fixed. So, what I'm saying is that this 10% spread, that this 10% interest rate that I'm charging on the market rate today should be fixed for the next 5 years. I'm not an argument, I'm not very big supporter of providing 5% interest rate like we did in MPMB. But at least my evaluation of a customer today should be at least for the next 5 years as far as the interest rate is concerned. Like in 2022, when we booked a loan, in 2 years' time, the interest rate had quadrupled. In that case, mortgage finance becomes a problem for banks. So if we can, even at the current interest rates, my problem is when I am underwriting a loan, I am evaluating the customer at this point in time. In the next 5 years, my understanding is that his income and all other things are going to improve and he will be able to afford a variation in the interest rate. But at least for some period, this interest rate, whether it's market, it's okay, but should be guaranteed to the customer.
So one thing I think we are talking about the pricing, we are talking about the risk. Such a difficult documentation requirement from DHA to the Karachi Development Authority to the, you talk about the CDAs of the world and you talk about, why can't we have a very simple, standardized documentation? It's not a rocket science. Because that makes life miserable for the banks, more for the consumers. Because the lengthy process to complete the documentation. So so
I keep coming back to this vehicle financing. Why is it so easily done? It's because I take my papers, go to the computer, get a number, and come out, put the papers in my bank, and I'm happy for the next 3 years.
Yeah.
The loan matures, I give him back, do a thumb impression, take it away.
Yeah, so let me sort of, although this is beyond what this short sort of a workshop is, but this is a very important point that you have actually raised, and this was even when the scheme, the MPMG, was actually going on, and that was right at the end, and then the government was no longer there, that this is what we were at that time working on to improve the business processes. Now, when it comes to business processes, again, what we would like you to identify in, in whatever time is available is that what are the business processes that you feel when you are doing housing finance, and you are in better knowledge in terms of what is the legal implication of each process, is that what do you feel are superfluous, redundant, and really need to be taken out, so that number one, the cost would come down and perhaps the speed of this thing would improve. Because the government is also equally sensitive, but the government has no visibility. What we come to know is through anecdotal evidence that somebody then approaches either a high level official or the chief minister, and then there is a whole sob story of what happened to me when I wanted to transfer my land or build a house, and this clearance and that clearance, and then the banking requirements which are on your side, are they as per statutory regulation, or are they the bank's own requirement to make sure that this is a safe loan? So we have to be very clear about it, because when we started doing this thing in MPMG, I remember there were like 22 steps that we mapped out with the banks, with every representative of the bank. The state bank sort of enabled it, that all the banks would sit with the government and map out what their requirements are. And when we said that let's take out this requirement, let's take out this requirement and make life easier, the banks said no, this we need it. We actually need it, because what if there is actually a default? So there is a problem, Shehnaz, and that really comes to property rights. That is our weakest link. The property right picture, or the title picture, is what then triggers all these additional requirements, this form and that form and that form, because they also have to do due diligence. So although that is not a fair example, but if you have a parcel in DHA, things are much smoother, because somehow an implicit title is insured to you, and the bank sort of take it for granted. But if it is adjacent land outside DHA, and you can see the additional cost actually added to it. So Hasnan,
I would like to give some input here. This is from HDFC side, just on the lines that are being mentioned. Right now, we face a problem with the private societies that are developing different housing schemes. A large number of those private housing schemes, they do not provide sublease. They only provide a letter issued by the builder developer themselves, and whenever a subsequent sale purchase transaction is taking place, another letter is issued. We strongly feel that it should be made mandatory that any private society building a scheme, they should be providing a sublease to the buyer or to the owner, because what it is doing, that a large chunk of supply is currently not financeable. Banks or HDFC are not going to finance an asset where there is no sublease. So if there is no sublease, it cannot be, in case of a default, it cannot be legally pursued. And I think it's a relatively simple and small regulatory / legal change that can be made, and it will just bring the existing supply into the stock that can be financed.
Hasnan, Mr. Mudassir from PMRC CEO, इनको भी इन्वॉल्व कर लें, जुल्फ़िकार साहब, मुदस्सिर साहब.
Just wanted to add a few points. I think we have been having this discussion for a while now, and I think maybe some of the people don't have the entire background in terms of what has been happening. So it's not that there is no coordination at the government level or at the banking industry level. There are various task forces and committees which have been set up. So there is a Prime Minister level task force which has been set up on housing finance and housing, which is looking at multiple recommendations and it has membership from all the provincial governments as well, from developer community as well as from financial banking sector, and I think FBR and State Bank and everybody in that group. There's a subcommittee as well. There are several subcommittees specifically looking at different areas. There's one which I also said is on access to finance, and we have given our recommendations. And so they are being considered, and there's a coordination at that level. There are two committees at the PBA level as well, which is the Pakistan Banks Association, and number of banks are members. I chair, those committees on housing, and we have made several, a good set of recommendations, getting input from the banks, and then they have been submitted to both the state bank as well as to the federal government. So there is a lot of coordination. However, even in the last MPNG program, there were these committees with staff, and they did a lot of coordination. As far as the banks are concerned, their application forms, which is property application for mortgage financing, were standardized. There were single-page application forms were introduced under MPNG. As far as property documentation is concerned for underlying mortgages, this is a provincial subject. It's a difficult one to address, to have a standardized property documentation requirements across the provinces. But that was also taken up, and we're addressing that through the PD as well. And we'll be, going forward, we'll be coordinating and with the provincial government and trying to address that issue as well. But that takes time. Second was on, somebody mentioned, I think there was a discussion on English mortgage. This again, the task force from PBA, and we have very aggressively taken this up with the federal government. I think it is being taken up by the FM and the PM level. It was on the implementation of the financial recovery programs. I think we on the ask. However, having said that, but the mortgages are still continuing. The banks are doing those mortgages. There is when the interest rate is down, we see huge growth coming in terms of the mortgage finance industry. And so they of their own organization, that they have high targets now and pursuing a very high monthly run rate in terms of levels. And hopefully that will address some of the concerns in terms of recovery of mortgages, of properties under the Zero Act. Third point was on NPNG. I think a lot of questions went around what is the low income housing, what are the income levels, property prices, and all those. I think Zhang would remember under the NPNG, we also started looking at the rent replacement model, and a survey was done across all the major cities, identify what the actual rental of these sort of segments of affordable low income people were. And with those, the installment, the subsidy came in looking at that amount so that there is affordability at the end consumer level. Now, if the interest rate subsidy is not there, and if you're looking at reducing the cost of housing unit that is being constructed, at current market rates, if you're able to have that sort of an installment, which is a rent replacement sort of an installment, where let's say the rental at that time in some areas where you are having those developments is at 15, 20, 25, 30,000, whatever, and that amount is, and if you can come up with current market, if the cost of the unit is such that at the current market rate that translates into that sort of installment, then that's a workable solution, right? And if that is fixed, so I mean, at URC, we promoted, I think that's something that we are very proud of, that we were able to change the market structure by supporting fixed rate mortgages as well, or hybrid mortgages, because we fix them for 3 years or 5 years or 7 years, and then they can get converted into a variable rate or fix it again, depending on the market rates at that time. So that type of a structure. But if we can come up with that type of installment structure with the reduced housing unit cost, and that can at least fixed for the next 5 years, I think that would be a good way to proceed further. After 5 years, market can change, the rate can still be fixed at that time, or can move to a variable rate depending on the interest rate environment at that time. So the income levels will rise going forward in 5 years as well. So with that, I think this is what we looked at that of FPNG as well. And it was quite workable, and as everybody was pointing out, that there have been no defaults as such under the MTNG scheme. And primary reason was that the installment for fixed rate, the mortgage was fixed rate for, it's a 10-year mortgage, but fixed for first 5 years, and the rate would increase for the next 5 years. Beyond 10 years, it was left to the bank to price it. So the same sort of a structure, however, without the interest rate subsidy, but having a housing unit cost reduced so that at the current market rate, the installment comes to the affordable amount. Third, I think the low cost, low credit loss guarantee again is very, very important. I think this is a segment which is again affordable low income segment. We have a guarantee we have given under the first RSL, we issued guarantees worth about 32 billion in the market under MTNG, and subsequently under RSL 2, we issued another 14 billion of guarantees. So the current portfolio we issued total guarantees of the under MTNG was about 43 to 44 billion. That funding is still available with us, and we can issue a lot more guarantees. Although the MTNG scheme is, and we have requested the World Bank, and I think if that recommendation goes internally from the World Bank team as well, the ministries involved, State Bank, Ministry of Finance, World Bank, we have written letters. It's been going on for the last 6 months or so. We are requested to remove the MTNG so that scheme was suspended and just make it low-cost housing based on the MRC definition or State Bank definition, which are both aligned. And so we can start utilization of that guarantee scheme again. And a lot of these schemes under this program can also be, the guarantee will be available for the bank's credit loss. And under the coverage was also up to 50% in first loss coverage, which is quite substantial in terms of, and very, incentivized for the banks to issue or do mortgages in that, under that scheme. In terms of, I think, and the key when it was looked at, I think somebody mentioned about the stamp duties and all. That's also been taken up, but stamp duties, even before MTNG at that time, as these discussions happened, these were reduced quite significantly at that time, and they're pretty much aligned across provinces. It's not that big a difference anymore. But again, when we will be looking at this through the TDA as well as under these task forces, we'll be discussing it again, and the lower they are, the better, of course, the environment will be. Some of the other recommendations include the transaction tax in terms of the property transfers and all that has been done. One of the, that recommendation has been accepted by, I think, government as well as FDR, and including the IMF, I think, because it's a targeted subsidy for the low-income housing segment. So, so having said that, I think that's pretty much, I mean, there is a framework which exists now, and it's not that it is, everything is uncoordinated or there are various committees within the banking industry and at the government level which are looking at this, and all these recommendations are being pursued, including a lot of them, I think somebody mentioned about it. So there is a RERA setup that's been done as well. The RERA law was there at the federal level. Recommendation is to have a federal level setup under RERA as well. So then have the provincial RERAs and the administrative authorities under the RERAs, and if everything consolidates under the RERA framework, I think that will address the issues of real estate agents, developers, builders as well, to come under that regulatory framework. Then. So that's it from my side. I mean, I think this can be a good program to address some of these challenges as well. And I think if those recommendations also come from this team of the World Bank, I think that will help push most of these recommendations at the federal level as well and the provincial level. And we can, I think, as Imran was saying, maybe unleash some of the affordable housing supply side as well as the financing side. Thank you.
The most populous province in Pakistan, with a population of over 110 million, has faced significant challenges in managing its evolving housing market. Outdated practices have caused delays and dissatisfaction among citizens and administrators alike. To tackle these issues, the Punjab Affordable Housing Program has introduced advanced information and management systems, including the Housing Market Information System, HMIS, Program Management Information System (PMIS) and Beneficiary Management Information System (BMIS). These platforms will help revolutionize the housing sector by providing comprehensive housing market data, streamlining affordable housing scheme approval process, and enhancing transparent beneficiary selection processes. The Housing Market Information System offers comprehensive data and insights into the housing market in Punjab. Users can now explore up-to-date housing market indicators, generate customized reports, and utilize a map-based interface to select areas of interest and conduct locational analysis. The system is designed to empower users with accurate and timely information, fostering a data-driven approach to understand the housing needs of Punjab. The Program Management Information System focuses on the efficient management of affordable housing schemes in Punjab. It enables sponsors to register, log in, and submit and track affordable housing schemes. The PMIS allows all FATA officials to digitally manage affordable housing scheme management and approval processes transparently and efficiently according to affordable private housing scheme rules. The Beneficiary Management Information System enables citizens to register, log in, and submit applications for affordable housing units, track application progress, and file any grievances with the assurance of transparent management. The BMIS also facilitates administrators in digitally managing beneficiary selection and allotment procedures with greater efficiency, backed by a data-driven approach for effective introduction. HMIS, PMIS, and BMIS marks a transformative step forward towards data-driven decision-making. By using these platforms, we can look forward to an efficient, transparent, responsive, and affordable housing market.
Because we would really be interested and would like to encourage you to come with innovative products to be able to go down market. And as Mudassir mentioned, there is a lot that's happening at the government level also in terms of the task force recommendations, which have been ongoing since the housing conference that many of you may have attended, that PMRC organized in Islamabad, I think in June or July. So there is a lot happening, it seems, and we are hopeful that things would change very quickly. So a few things that were highlighted, which the program is already involved in. Firstly, we have developed or helped the government develop new planning standards, and these are going to ensure more densities in the schemes that are built. Now, the advantage to the developers then is that they can use the land more efficiently and therefore have higher turnover of their financing and be able to then at least cross-subsidize for the 20% units that they are supposed to deliver as affordable units. Now, you are rightly questioning what do we mean by affordability, and I would ask Jan later to explain how we are in the beneficiary management information system that was just mentioned in the video, trying to target beneficiaries through the BIS data, the Benazir Income Support Programs, National Socioeconomic Registry data, which then provides the PMT score and the residual expenditure as the ceiling and floor. And for each scheme, we then seek data from them and identify which is the window of beneficiaries that that scheme can target and which the affordable units can be delivered to. So we are looking at that. Accelerated processing is very much a part of what the rules, regulations, and procedures that we have helped develop, as well as a one-window operation. So what you were mentioning in terms of multiple levels of clearances and approvals, hopefully will get reduced, particularly for the developers. And again, because time is money for them, and we have had roundtables with them earlier to seek their feedback, and we have another one scheduled for tomorrow to present to them all the changes that have been made and see how interested and engaging they would be with this. Mudassir mentioned the federal RERA. There is already a provincial RERA that has been drafted for Punjab, and it is going to go through a stakeholder consultation process and hopefully get approved very quickly. What we mean by core housing, as Jan mentioned, is really a very small unit that people can expand over time through their own savings or through additional mortgages or loans or family support. We are developing prototype designs for them, and these will not just be on individual pieces of land but also walk-ups. And we are looking at densification through ground plus 3, which really needs to be the case for urban housing. We have developed a location criteria so that these schemes are not out in the middle of nowhere, which then at least the poor cannot afford to live in because the transport costs are very high to their livelihood points. So the location criteria helps identify feasible land parcels, but then through the new planning standards, the higher density make affordability more possible. Similarly, we are looking at not just smaller units, but also appropriate standards of finishes and construction. The PMIU team is already engaged with manufacturers of innovative products, which not only reduce the time of construction, but also are looking at bringing down the costs. We are also looking at land banks through another program that the bank is financing, the World Bank, which is the Urban Land Systems Enhancement Project, which is digitizing all the urban land records, and that's ongoing, and it has a lot of good collaboration with this program so that it can help identify good state land. So the issue of what you were mentioning in terms of title is going to be in a way reduced, and that risk, so that state land, which is again appropriately located, is available, and where then we can help the government not just do core housing for the lower segments, but also attract developers to do joint venture schemes where the state land is provided as the government's sort of initiative, and then the developers can bring in the capital to develop the scheme. And the ease of doing business, again, in terms of facilitating the developers, has been focused upon in this program already. We would like to hear from you more on how we can facilitate the banks and the financial institutions in that segment. I would request Zhang to come in with a little bit on not just the beneficiary targeting mechanism that we are looking at, but also a lot of people mentioned about price points and affordability. So maybe she can provide a little bit more clarification on what our thoughts are currently. Thank you.
We have bigger problems that we're facing for the entire mortgage sector. Again, I'm encouraged by all these energies that I saw also earlier as part of the Near Pakistan Housing Program, where different task forces were put together and solutions were being discussed, and some of which actually are also being implemented. So overall, the direction in terms of the mortgage market, if you look at the longer term trajectory, I think is a good starting point that we're all in. And a lot of the risks that are talking about related to the variable rates and things like that, and the pursuit of a fixed rate. At the end of the day, somebody would need to pay the bill for mitigating that interest rate risk. So it's safe to say that sort of it's from our Punjab Affordable Housing Program, which are focusing on the supply side, we have limited leverage on that one. But Mr. Mudassar's PMRC and through the national level housing finance project, there might be actually more room there to look into these potential solutions. If it's not the current project, but this ongoing also federal level task forces might also help. And we can, from our end, to support any channeling of or gathering of these information at ease to get it discussed at higher level. Now, coming back to affordability issue, what we can do, however, to help a lot of the risks that you are discussing, is to actually enhance loan to value kind of profile in a way. From affordability perspective, we did a lot of analysis, back even in the MPMG time, to see what are the income profiles of the Punjab population and households, and what are the prevailing lending practices, interest rates and tenure and things like that. And then to work backwards in terms of what they can afford given that prevailing rate. So thanks also for all of you also providing these type of information. But judging on what we know and what we have done, I can actually leave the floor to Matt to sort of walk you through. So that's sort of from the bottom end to project what is the affordable price points that they can afford. No, the other aspect is really working on the supply side, FATA, and understanding what is the market and also the private developer, what this market is currently delivering, and hence how these other rules, regulations, planning standards can help reduce that cost by using land more efficiently and then reducing some of the costs associated with providing like unnecessary white roads or unnecessary kind of plot sizes to then reduce that cost from the supply side. Before giving the floor to Matt on the figures, I just wanted to mention this one risk that I haven't heard from you guys, which I think is also quite important to deal with, which is the aggregation of demand. At the end of the day, those lower income segments, exactly how low, we can actually use a very dynamic perspective depending on local markets. It could be different, no, in different markets, Punjab versus Rawalpindi or versus Faisalabad. But coming back to this issue, what I understand that tier one, partially because of supply, partially also because of the demand that you were gathering from the actual applications, many of them are not credit worthy from your perspective. You waste a lot of time underwriting that, and it might be actually not worth doing from your perspective, the cost of doing business. So part of the beneficiary management information system that we're helping the Punjab government build is to then use this, transparent and scientific measure to pre-screen some of the applicants. Some of those that are too rich that can already afford one of your loans without any government support shouldn't be benefiting from this. So we use government incentives in terms of connecting to the last mile infrastructure as the private sector housing scheme supported by Punjab Affordable Housing Program can be more targeted to those that have higher proportion of affordable units delivered. What we were trying to do here is then use the PMT score, which has quite a big coverage here, then to mathematically using regressions and things like that. Now you then link to the household income expenditure survey data. You have an estimate of the monthly income. So you then gather the beneficiary information system will gather these. When they apply, they get an automatic PMT score churned out from NSCR database, National Socioeconomic Registry, and then is calculated automatically to a household income level. So we pre-screen those that are super rich, and then pre-screen those, to say that are too poor to be considered as a credit-worthy customer. So we sort of send these aggregated demand to participating banks, and then the banks make the final credit decision. Nobody is pushing you to actually, you have to give them the loan. And then if you reject them, the next batch is coming also as schemes by scheme that are applicants coming in. So the idea is then you have a relatively good, number of applicants that you can consider without wasting a lot of your time. So that's essentially the gist of it. And I think the PMIU has been working closely with NSCR to actually have that developed. We want to have follow-up meetings to work through the process flow and see what are the things that you think could be better serving your objectives. Then Matt, then you can ask questions.
Okay, so I'm going to talk about some tentative numbers that we crunched, and obviously there are a lot of variables that interact And so I'm just going to present some of the figures, but the figures are floating or volatile, subject to the assumptions, how you underwrite and etc. So first of all, and you can go actually to the housing market information system, which is public. So there's like an income distribution. And the published figures have income quintiles, basically. So here, typically we do targeting in deciles. And so the bottom deciles is somewhere around 50,000 rupees per month household income. That's the poorest 10%. And the richest 10% are at 150,000 rupees per month household income, okay? Yeah, that's the median. There are of each income decile. So for decile, it's the richest 5%, for example, for the top 10%. So the middle of that. Anyhow, so the in terms of targeting, this may result, let's say, in a focus for us of between 60 to 80 or 90,000 rupees household income per month. This is where we might want to go. So it's subject also to what you will underwrite, obviously. So it's like, but that would be our desire. Then subject to what you assume how much the household can spend. So if you go, for example, with a flat 35% income or expenditure share for housing, the monthly payments for the EMI may be in the range of 20,000 to 30 or 35,000 rupees only. But this is what actually people below the top or below the top 10 or top 20% actually can afford. Okay, so that's even middle income to some extent, not at least the 30,000 rupees payment per month would be higher middle income as per the real distribution at the bottom, because this is where a large subsidy would come and the ticket size is relatively smaller, to maybe 60% at the top. So basically, with the price reduction, which is similar like a down payment subsidy, and the household's own saving, you already have a down payment of 40% to 60%. And that should, of course, change your comfort in making the credit decision, or that's the underlying assumption. So as you see, the numbers vary quite a lot. So the ticket size is double subject to your lending assumptions. If you go even in the range that the National Support Program, they did the home improvement loans, then you have even shorter loans and even higher interest rates, then the ticket sizes would become even smaller. We would not tell you what that is. We would like you to say what you are comfortable for to lend, to make a credit decision. And that may well vary on a kind of like a sliding scale. The higher we up in the income distribution, the more likely there's a long tenor and a relatively lower rate, whereas the further you go up and the ticket sizes become smaller, so the administrative cost as an interest rate spread will be larger and possibly the perceived risk profile is larger. You will need to kind of say how you would underwrite that, what would be the lending terms, basically. And I don't know, so maybe you can also revert and tell us which customer you would, rule of thumb, underwrite in a certain way that would inform us about what are reasonable assumptions about affordable price points to which we can design the supply side so that there's ultimately a match. Yeah. What we cannot change is your lending rate. So there will not be an interest rate subsidy from us. I don't know if it comes from another source. That's a different question, but it will not come from us. So there will only be, at best, there will be like a price reduction which enhances loan to value. Okay. Yeah. So I think that's it for now. Yes.
by providing benefit to the person seeking loan, you mean that you're gonna chip in some amount to the equity portion, to the value portion? I couldn't get.
So basically, let's say the supply of the house or the cost of producing the house, maybe, let's just make an assumption, maybe 1.8 million, okay? And then with the funds that the program has available, we can reduce the offtake price to 1 million, just as an example, okay? No, not well, but I mean, subject to the income level, household characteristics, and maybe it's also only going down to 1.2 million. I'm only explaining the mechanism, don't nail me on the numbers, okay? So then you would make a loan for 1 million, but the cost of the property would be 1.8 million, that's the production cost, and maybe the market value may be even above that. Yeah, because
we're talking about the loans for constructing a building, or it could be a constructed house as well?
No, well, it would typically, let's assume it's the offtake price from a developer's budget sheet or from Fatah's budget sheet, but it's not. It would typically not be self-built.
Oh,
Yeah,
right.
and it's not for the construction loan for the developer, which is a completely different topic. So we are only talking demand side right now.
You seem to have a lot of questions when we're talking. and if not now, I actually have a question for you guys. When it comes to developer, because the 20% in the private affordable housing scheme, the developers will need to build first. Oftentimes, developer financing is also challenging, right? So I was just wondering how you normally deal with that. You don't that often do developer financing. As we move around the table, very few of you mentioned that you also do developer financing. How do you see that?
Thanks to the financing, but with the different teams.
Yeah. So they're not here. No, they're not. Okay.
Because that's a commercial transaction.
Commercial transaction.
So most of the people sitting over here are consumer finance people.
Right.
So that is a different segment of the bank that deals with them.
Well, Matthias, just wanted to add a few things. Actually, I do have so many questions in my mind which I want to ask, but I think that's not the platform. So basically, just wanted to make the things simple. So Matthew just told us about. So I think I'm basically with the Yan where she was actually trying to say the reverse engineering part. So first we have to do, yes, of course, the reverse engineering, how customer will going to pay the EMI, the installment, not just for the 5 year, in fact, for the whole maturity. So actually we have to think from the customer perspective rather than from the business side or from the banking side, right? Now the second part is about what people are talking about, that the developer financing. So developer financing, we need to look at what SBPPR said, because we have to regulate by the SBP regulations. So we have to comply that part. So developer financing is basically, we have certain segments, corporate finance, commercial finance. So that part, help out, I think your questions regarding the developer finance. So what we can do, we can actually just give you the solution on how can we basically facilitate the customer at the lower income side, which is the individual perspective. So from the consumer banking, we have to have the financing to the individuals only. Of course, the commercial and the corporate part will tell you on the developer finance how they will contribute in certain area and what could the major challenges at their part to facilitate the developer finance. So right now, what I suggest is the reverse engineering, of course, and the amount you are basically talking about, that 1.8 million maybe could be enough, but basically these numbers looks unrealistic as far as the consumer banking is concerned, because we have we can also share with you the how many number of applicants who basically apply for the loan And of course, we have to analyze the alternative scorecard model, because this scorecard model actually analyze the credit worthiness of the individuals. So there are certain, right now we are just talking about the DBR, debt burden ratio, but there are certain elements which need to be looked at, which in scorecard you see there are so many certain things, the number of independents, a rented house or a own car. So there are certain things which we have. So there should be a proper scoring model, alternative scoring model for the low income segment to facilitate or to understand their need accordingly, and at the same time to mitigate the risk as well. So we have to obey the SBB compliance as well in order to develop a product. So I think we have we just take what you actually say about it. We just go back, think it, as a bank we'll think on that, and I think give solution for that, because MPMG is a past. Now what we are looking at this circumstances where the interest rate is variably changes, socio-economic conditions are changing as well. So actually we need to look at, just think about it, and I think get back to you with the solution in the future. That's from us. Thank you.
So so when you were saying about aggregating of borrowers, what I understood was probably you would also be considering, I'm not sure whether that comes in your program or not, is bringing the borrowers to a specific location, building units over there, and because the ticket sizes that you're talking about will only make sense for these banks if the borrowers are also available at a particular location, so that the units are available and then the banks can go into financing. Because if I am writing an independent loan in the entire country, these loan amounts will not make sense, and the risk will be so expanded that it will be very difficult for banks like us to handle that. So when you say about aggregating borrowers, my understanding is that you will bring the borrowers as well to these specific locations where they'll be buying, there'll be buildings, and which will be managed, and the loans will be the property perfection will be easy, the collateral will be easily handled, and especially the foreclosure angle towards the end is easily managed for us, rather than we can go to an authority, file a default, and we can easily get so that is the only way this whole thing can work out, because independent underwriting of facilities throughout the country will be very difficult.
That is the case we're thinking about.
Yeah,
Sorry.
as long as that is the case.
Yeah.
So just want to clarify that we are.
I'll tell you, most of us write personal loans for average ticket size is 200,000 rupees. But the market rate is high, so that takes an advantage. The auto finance average ticket size in the country is right now about 2 million to 2.5 million. 2 million to 2.9 million. So with the ticket sizes that you're talking about is not very different. And why housing finance, especially for me, is attractive, because I underwrite a loan and the average repatriation of is around 1.25 to 2.5% per annum, the principal redemption. So the income that I make over the loan is spread over a much longer term. So my portfolio gets invested over a longer period, and I can make much more income. My underwriting costs go down. There are a lot of factors that come into play so why mortgage finance becomes attractive. And one of the things that I'm not sure, I didn't get the name of this individual, was Umar Masusa. So one of the things, why mortgage finance will be attractive, if the collateral perfection and liquidation process becomes easier for us, the tenor of the loan will automatically develop an interest in the banks. Because most of the facilities in consumer finance, other than credit cards, are term based, and they finish in the next 3 years. But mortgage finance is the only facility that lasts anything between 10 to 20 years. So it's a very attractive product for most of the banks.
So Mizan Bank, I would like to request you to, because you are doing a lot of lending, consumer financing, coming up as a big bank, if we see just a number of recent past. So would you like to comment anything on this ticket size and on this model of aggregate demand and inviting the banks for the financing?
Banks run through the state banks and NPB. So I suggest you please incorporate Mr. Mudasir as the chair of the Master Banking Council. And the bank will run through the forum because it's all banks. We also know the investment banking, corporate banking, commercial banking also know. So in the as far as the consumer financing, yes, we have a very excellent experience in NPMG. But for this specific program, we have to refer to our management and just send us the proposal. We'll do it. Inshallah, previously we do it 6.4 billion disbursement. So next one.
Bank Al-Falah from.
Second question, sir, where you should have taken statement and it is on board for this project. PP is the right.
What is PP, Pakistan?
Pakistan Banking
Association.
Pakistan Banking Association.
There is a specific forum for the board. Mudasir Saab is chairing this.
Mudasir is there, so he's the chair.
Mudasir Saab, anything from your side on this? Mudasir Saab, are you still with us?
जी
हाँ दूसरा रिजल्ट
नहीं वो किसी और मीटिंग के लिए चले गए आप इस
right is not available.
Maybe someone from the EMRC may comment.
If this is Imran from HPFC, I think the conversation that's going on, if I could fill everyone in. As far as the existing SPP regulations are concerned, in terms of the model that is being discussed, I do not really see any stumbling blocks from the regulatory point of view that would kind of disable the banks to cater to this sort of a scheme. The only thing will obviously be the size of the ticket and the operational cost. But then that's up to any individual organization in terms of bringing their operational costs down to be able to cater to this sort of a need. Just to put things into perspective, hardly 3 or 4 years back, the whole banking system was actively involved in auto finance, where the average ticket size would be in the same ballpark figure. So from that perspective, it's not impossible to cater to this kind of a ticket size.
It's good.
I think SPP is going to be excited if mortgage finance takes up in the country without their intervention and without them having to provide subsidy to the banks.
And the model that is being talked about is actually stagnant figure.
All of us need to make that effort.
So again, that doesn't seem to be creating any issues or problems.
Just wanted to ask a question to Bank of Punjab. Okay, there was a mention that private societies do not provide subleases. Now, you have been involved with a private developer for mortgage financing. So, how did you cater for this issue? Were they providing subleases?
It's not for all, it's for some.
It's for some. But this one was
some
not.
of this is specifically to the Karachi, especially Southeast.
Okay, so you're talking about Punjab specifically.
Yeah.
No,
लेकिन वो पंजाब में भी
quite a large number of private builders, they do not provide subleases. It's not that all of them, but a vast majority does not. So if this is being mandatory, it will significantly increase the properties that become financeable.
I have one more brief comment on ticket size and margins. So we fully understand that a smaller ticket size and a shorter tenure will have higher margins. That's completely okay for you to price it freely, or at least from our side, nobody would want to intervene. and it's actually a little bit counterintuitive, but let's say a 15% mortgage for 15 years may allow a much larger ticket size compared, let's say, to a shorter, like a 5-year and let's say 25 or 30% micro mortgage. But you can make 3 micro mortgages over 15 years, and the cumulative ticket size or the cumulative affordable project cost over 15 years is actually much larger with the shorter tenor, despite of the much higher rate. So there's basically a trade-off. How livable is that initial house, but the versus how valuable is the final product after 15 years. Okay, so the minimum or the most simple product that is acceptable to start will result in a larger, more livable house after 15 years, or actually after 10 years once the third loan cycle and investment has been made. And so this is for you to consider as a bank. It would be a different, it's like a product graduation, and there are multiple loan cycles. So it's a different, so you are investing into this portfolio that you are building up over multiple cycles, and you are keeping the initial loan amount small in order to de-risk actually your profile.
But are you talking about construction loans or?
Well, I'm talking about the financing the initial core house with a small ticket, and then financing the extension of the core house with the next loan cycle after the initial loan is being paid.
So actually, you're talking about the restructuring of the payment. So,
no, I'm actually talking about financing the core house with a 5-year loan and amortizing 100% of that loan within 5 years, and then making a new loan for building or extending the house and building the next room or the next floor or whatever that is. But it's basically you develop like a product chain where you finance the highly subsidized core house.
That's what we were referring to earlier. Build the repayment, base the customer on his repayment, and then give him a bigger loan for a bigger amount, so that he can expand in his own house.
Exactly. Yeah. And there's basically a trade-off between that long-term mortgage, which has a lower rate, but also locks in the cash flow from the household for 15 years, which then is not available for the next loan cycle. Yeah. And so this is if you make the shorter loan, even though it can have a much higher rate, it will result in a larger asset over time, for avoiding the interest rate. But for you, it's a different product pipeline that you need to build.
Made a point how we can basically minimize the amount of installment to the customer, right?
Yes.
So for that, I think there's a very simple solution for that. I think you can extend the tenure of the loan, because rather, the interest rate is high, or the ticket size is bigger ticket size, but you can mitigate that part through extending the tenure number of period in the tenure. So that this is, for example, in SBB Prudential, I think we can see that we can basically finance the loan up to 25 years, right? So, but we can make things according to our banking policies, जो भी हमारी policies उसके हिसाब से we can manage it. But I think the way you are actually thinking to minimize the installment amount is we can simply do that with the extension of the tenure.
Yeah, I'm thinking it actually differently. I think the installment amount is fixed by whatever the household can pay. Okay, and then you can afford a larger ticket amount if you go for longer tenor. But if you go down market and the rate and the lending rate is high, then extending the tenor will only marginally increase the ticket size, because you cannot, virtually all of the money goes to the interest rate. Okay, so then the initial installment, which let's say is like 20,000 rupees per month, virtually all of the 20,000 rupees go to the interest rate. So that's actually fixing the ticket size. Even if you go for longer tenor, 20,000 rupees go to the interest rate. And so if you have like a shorter tenor, then you amortize more quickly, but you can make multiple construction cycles. That's what I'm saying. Yeah, and so you are lending out, the household can construct
So
more.
why not the interest part is funded by the World Bank? So, you know, principal is
No.
We already ruled that out. It's not possible.
It's not on the table.
And always it's not sustainable once that interest rate subsidies is out. It's
So
not gonna be
basically, we are providing you food for
commercially-
thought, but it's really the request to you is to come back with ideas and innovations.
And
So
we
we
can
really
also
look
have
forward
follow-up
to.
meetings to actually look at the spreadsheet level and, you know, essentially what I think he's talking about is like starting from a small kind of mortgage, core housing, but then over time to feed the needs, to meet where the customers are in terms of income capacity through construction loans subsequently.
I think for
By
that we
extending.
need to look at the documentation requirement, you know, suggested by the SB. For that we have to look back, we have to, you know, actually evolve with that thing that how can we, you know, help with this. So you can just give us, you throw your, you know, what you thinking, so we can, you know, give the solution for this.
Well, I just want to add one thing. I think the product development, we can come up with different products, but the success of that product will actually depend upon the bank's willingness to go ahead and go forward. My fellow colleagues, Zhang and all that, they have actually nailed it by highlighting these remedial issues in security profession. So at the moment, we're charging clients on the tax and stamps and duties and all that. You see, so I understand that FBR has its own pressures. They have to develop they have to keep their revenue streams in line also. But this industry is actually associated with 13, 14 industries. For example, if they take a cut on that by giving some incentive to the banks who lend more in mortgage, if you're not giving subsidy, some incentive in the form of tax, corporate tax, I'm talking about from lender perspective. And for the borrower, in terms of stamp duty and all that, that amount of tax, if we can give some relief, you see people can come forward. Banks can go ahead also, and they will be motivated. And product can be successful. By having the same limitations, we again go ahead with the same things that might get done. That's what my situation is.
Adding to that point, if I may, like I said in the earlier as well, that the governments need to step in doing a lot of things, like my colleague just mentioned about the relaxation of the rates. There was an incentive on the markup paid during the year that be deducted from the taxable income. So you used to get a tax relief, but last 2 years that relaxation has even been taken away by the government. So it is getting tighter at the government level, be that on the taxations or other charges. Thank you.
I think the government is not interested for selling it to buyers.
This is how they say. This is how
Under the MPMG program at that time, the government had given a tax incentive for banks in terms of their low income housing portfolio. And that tax rate is reduced to, I believe, around 10 or 15% rather than the normal corporate tax rate for just for that portfolio, which is the low income housing. And I don't think that rate has been revised or has been changed. So that low tax rate incentive for low income housing for banks is still there. Secondly, on this particular point on mortgage deductibility that was removed, yes, absolutely. And one of the key recommendations from the board that we have also sent to the government and FDR includes that recommendation that incentive of tax on mortgage payments should be brought out into tax into the income tax law. So that should be more. So which should be an incentive for individuals, particularly low income individuals. And that may also reduce their threshold in terms of the overall income bracket, and that will help them also otherwise as well as in terms of mortgage payments. So just wanted to clarify those two.
Thank you so much, PMRC. I think with this we should conclude our session and proceed for the lunch. Before the former closure, any remarks from Madam World Bank side, Madam Shehnaz, the last moment thoughts?
No, really would like to sincerely thank all of you for the active participation, but with the request that please do continue this discussion virtually, and if needed, we can also meet in person. But I mean, what we were presenting are really food for thought for you. But we are looking at you to give us recommendations and how your products can help the lower segments of the society. So with that, really sincerely would like to thank you all for joining, and maybe you can give us venue for the lunch, which is what is keeping
From
us.
food for thought to the food for the body. So it's Imran sir.
Yeah, so just a final word. There is a bottle placed in front of you, so you will always remember us. And take it and just do open his caps, and once you return, then open the finances also. Just open.